Welcome to Driven, the Unscripted Success podcast, with your hosts, Mike Mannino and Nariman Hamden, bringing you insights and stories on achieving personal, professional, and financial success.
Hi, everybody. It's Michael Mannino, and welcome to Driven, Unscripted Success podcast. Today on the podcast, we're interviewing professionals who share their experience with you on the tips and tricks and how they got to where they're at today. And we got Kate today. She's an accountant. We were talking earlier off camera, and she was telling me that she loves accounting. I'm like, oh my Lord, that just sounds tough. Kate, how you doing, young lady?
I'm doing great. How are you?
Better than I deserve. Hey, do me a favor, tell everybody where you're at, what you do, and how you got to where you're at.
Sounds good. Well, I am an immigrant originally from Ukraine. I've been in the country for 13 years now. I got my CPA license. I'm Colorado-based, and I've been in the business for over 9 years. I have my firm that is relatively fresh. It's been a few years. I've been working for other companies just to gain experience and to see how the world works and then make it better.
Nice. So where you at in Colorado?
Castle Rock, but frankly, it's everywhere. The car gets you anywhere you want.
I used to live in Colorado Springs.
Nice. Well, I'm not a huge fan of Colorado Springs, but I just am a huge fan of open spaces, so I'm not a downtown girl.
Back when I lived there in the 80s, it was open spaces. It was like
Yes,
50,000. It was 50,000 people in Colorado Springs. Now there's like 500,000 people in the Springs. Now
and
that's a busy metropolis now, and it's a lot different than it was before.
For sure.
So tell us a little bit of what you do, and you said you love accounting. What is your mainstay? What do you do? What's your bread and butter?
Ooh, that's a loaded question. You got only 25 minutes, right?
That's right. Good point. Very good point.
Well, what I do, I work with small businesses, and my ideal way of working with a client would be doing their monthly accounting, assist them with payroll, sales tax, all kind of, compliance little things. But then based on that accounting that is done monthly basis, I can do advisory and tax planning. And that is kind of the whole key. We just had a marketing meeting and I've done pretty cool video regarding, I truly believe that bookkeeping is more important than a tax preparing. Not in the way that you shouldn't prepare tax returns, but in the way that if you have really good books, not so great tax preparer will do a better result than if you have bad books and a really good tax preparer, because all they do is take your foundation and build on it. And if your foundation is faulty, your house of tax will crumble.
And you can lose money.
Oh, God, you're going to lose money. You're going to lose time and stress. For some reason, everybody really stressing when it comes to IRS or state or any kind of, tax agencies, which is kind of funny for us as accountants, because not that we love getting letters from them, but anytime we do, instead of, oh my God, what do I do now? Our reaction is like, no, you're wrong. Let me talk to you about it. We'll fix it.
How often are they wrong? This is a good question. How often are they wrong when they come up to you? Because I the one thing I've learned in business, thank God I've been in business for 35 years. I've never had any problem with the IRS. I've always paid them what they deserved. But how often, they've never asked me for anything. How often are they wrong? I mean, how often have they call up a client of yours and like, oh, we think this, and it's like, oh no, it's not that.
Well, actually, it's kind of a mix of consequences of what the client have done and what the IRS sees. You know how the simple thing, like a 1099. So let's say somebody works for you and you submit 1099 for them. IRS gets a copy of 1099. That's kind of the whole process. But also a client or your contractor should get a 1099. So IRS have a list of these 1099s for this client. And this is the funny thing that we have seen, like the most obvious mistakes that is so easy to fix with IRS is that, say I'm a contractor who got 10 different 1099s. And when we reported my income, we just showed the revenue in full amount, which included these 1099s and a bunch more. So like somebody did not send me a 1099, I did off jobs and so on. So usually it's about 2 years, 2.5 years in. IRS statute of limitation 3 years. So they send you a letter 2.5 years in. That's the point at which you do not remember what the hell happened. And they're feeling like they just cut the deadline where they can still go after things. And if you can't recall what happened, they're free reign. They can do what they want. But point is, usually the company's like, oh, we have this 1099. We haven't seen it on your tax return. Usually, in this kind of case, we would respond with, yes, you did. It just listed on one of the $1.5 million that I made. This is one of the. And IRS usually says, oh, my bad. That's kind of stuff.
My bad.
Yep. Yeah,
So
pretty much.
is that one of the most common?
No, just one of the few. I just see so many. Often we see it's either sort of kind of miscommunication, I would call it that way, when the contractor reports something. Now, there's a trick. If say 1099 that IRS got was for $1.5 million, but you total revenue reported on your business return is $1 million, here's IRS has all the rights to go, like, where's the $500,000 you didn't pay tax on? So it's fun.
That's a good thing. Never report less than what your 1099 say.
Basically, never report less than IRS knows about.
Right. That's a good point. So I've been dealing with the IRS for 30 years, 35 years, like I said, and I've never had any problems because I've done the right thing. What are the things to watch out for when dealing with the IRS?
Dealing meaning when there's a letter came already, or
well, let's just say doing it. So I have a philosophy: do it right, you do it once.
Love it.
What does doing it right look like for most people? See, I want you to explain it because you're going to be a lot better than it than me.
Well, here's a tough, again, you know what's favorite CPA's answer to everything? It depends.
It depends.
Because here's the thing, you can have the same facts but presented in different ways that will have different outcomes. All of them are true, and all have different consequences. So if you're 1099, you're reporting everything on your Schedule C, you'll have Social Security, Medicare, all kind of tax. If you're the same income on S Corp and then you did reasonable compensation, then what's left, you paid only income tax on. It's the same revenue, it's the same expense, but it's two very different tax amounts. Any of them are true? Both are. But is there a better way to present it? Yes, there is.
So what do you like better, LLC or C Corp?
Ooh, C Corp is different.
I know, right?
Here's a question. When you say LLC, do you mean Schedule C on your personal return? Because LLC can be an S corporation or it can be sole member proprietor where you report it on your personal return.
Well, all of mine are limited liability companies.
So that it's almost like saying you can be a human and a good person. One does not mean another. So you can be both. You can be a human and a good person. You can be LLC that files as S Corp. But you can be a human, but not necessarily a good person. So you can be an LLC, but not necessarily an S Corp.
Oh, wow. That's interesting. I got to check that out. I gotta see how I file it. Typically, I would just file all the LLCs and they would come out. So we're in real estate. So we do a lot of K1s. Yeah. And then they just, the profits fall into the personal. So we go from LLC to personal.
Okay. So if you're talking about partnership, usually real estate investment goes into partnerships because it's the smartest way with distributions of everything else, like a property distributions or funds distributions in case there's reasons why we do it real estate and partnerships. It's most beneficial way for the tax. But that's another thing.
It seems to be the easiest. LLC seems a lot easier to set up and run.
So LLC is the way you register with the state. It's limited liability company. You can register that and then file as a partnership. You can file as S Corp. Now,
through the LLC, I thought the S Corp and C Corp are separate from the LLC.
S Corp, C Corp, different things. S Corp is basically small corporation, and C Corp is big. So the benefit between S Corp and C Corp, there's two different points, right? If you're making about I'd say like under $500,000, S Corp is your perfect place to be. Once you start making pass, that's a good place for C Corp because S Corp does not pay any tax. It passes through to you. That's why you get those K1s. And then you pay the tax based on your whole situation because you might have 15 children and then suddenly you have a load of deductions.
I don't have 15.
Well,
that's a lot, young lady. How many kids you got? I mean, that's like 15.
Well, maybe, but maybe you're also a real estate professional and you have losses from the previous stuff, and then suddenly they offset this year's income. But it's you personally, because maybe you have 140 different investments, and I've dealt with clients like that who's invested in over 120 different partnerships that are real estate investors, and maybe this property made money, but this one lost, and we offset, and there's suddenly no tax liability there. So that's why pass through is so convenient, because it's all about you, not about how the business, specifically business, doing. However, once those corporations start growing into, say, now it's a corporation that makes $1 million, and you're like, now I have to pass through $1 million to myself and I just don't have anything to offset it. What do I do with it? In that case, when it's a C corporation will pay 20% tax. You personally would owe 37% tax on $1 million, but the corporation would owe only 20. And then depending which state you're registered in, like Delaware, for example, it doesn't have income tax for the corporation. So the only tax you pay is that corporate tax. And then depending on what your investment in that C Corp is, what kind of percentage you get, and so on, that's like a little bit of a different conversation. It just makes no sense when it's making like less than $500,000, then you double taxed. You're going to be taxed here and you tax there, and there's just not big enough benefit to do it. So
That's why the LLC is better under a million.
it all depends.
No easy answers, right?
Oh no, if this was easy, we wouldn't have to study in college
Right.
for 6 years and then go through 2 years of licensing and then trying to figure out your way around 60 hours a week for multiple months, years to go on your own. So yeah, no, it's not easy.
It's not easy. So what's one of the biggest challenges you had to overcome in your career, other than the schooling you just talked about?
Honestly, I kind of like school, so I don't know if I would. Yes, it was challenging because I had to do 55 hours a week of work and then 24 hours a week on top of that studying. I did also have children around their 10, 12 years old. So it was a challenge. I wouldn't say it was impossible because obviously I made it through.
You did it. So the evidence is there.
Yes, a little bit of them, yes. But what I would say the biggest obstacle was discipline, because if you don't have internal discipline in anything you do, it's just any business owner with anything, because you have so many buckets, so many hats you have to wear. Your business management, and then your people relationships, and then sales, maybe accounting or whatever it is. Being able to set discipline and the schedule in a way that you can still take care of your body, mind, and work. I think that's the biggest challenge. And it's not just for me. My husband he's been since 18 years old, he's been working out every other day. And his point was, if you don't set up yourself time for the gym, because for me, it was like, oh my God, I have to take an hour and a half out of my day. That's like a tax return or half of it or
It's like a
whatever
tax
it is.
return.
Yeah, I count my life in tax returns. He's like, if you don't do that, you can't focus on that tax return. And he's absolutely right. Because when I wake up in the morning, I start 7 a.m. and then potentially work till 11, 12 o'clock at night. If I don't get that break, physically exercise, by the evening, brain is just melting and I still have to keep
Mhm.
going.
I know the feeling. So typically, I'm a professional brick breaker, and I work out 4 to 5 times a week. And the secret for me is do it first. There's an old saying: if you got to eat a frog, if your job is to eat a frog, eat them first thing in the morning. If your job's to eat two frogs, you got to eat the big one first. So
That's a good
whatever my
approach.
day starts with, it starts after my workout.
That's fair. I've tried that. Unfortunately, apparently in the morning, I don't know what's going on, but I tried a couple of times and I came back home. My whole family felt like putting me in a hospital because I would turn like pale green. And I was like, I'm okay. So, you don't appear okay? This looks very sick. So I have to do like, and I came to conclusion, and I came to, as I said, discipline and sort of celebrate those opportunities and moments, because I talked myself through it and I was like, okay, if I do it first thing in the morning, it's good on one hand, but also I end up that pale and kind of like losing my sense of what's going on. But if I do 6 hours of work, and then go work out, and then do another 6 hours of work. Now I have 2 halves and not one very long day.
Nice. I like that. Everybody's got their way. Sounds like
Yeah.
things are going pretty well for you right now. And have you ever considered or find ways of creating passive income? Making money without doing a lot of effort.
That's a funny thing you asked, because if you were to ask me this 5 years ago, I would said
Hmm.
no.
Okay.
The path of my work. So I worked for 5.5 years in one CPA firm. And that's where it kind of started, because I gotten into accounting sort of almost accidentally. I was running away from a bank job. I just needed some other job. And this job was
I
available.
love that. I love that term, running away from a bank job.
It was
Sounds like you're robbing it.
Well, oh yeah, it does sound like it. No, I just had really terrible manager who made my life miserable. And I'm not the kind of person to just quit and walk away. I had to find another job. I actually gave 3 week notice. Anyways, I got this job in accounting firm, and I was working there, and I've learned everything, most of what I know out there, because not because I was trained on everything, but because I was given tasks I had no idea about. So, for example, here's payroll form. We got to submit 40 of these, figure it out. So I would go and read 15 to 40 pages of instructions in each form, and then know how to do it, and then start fixing other people's mistakes. And it just kind of like I was forced into knowing it, because I just was so, when you don't understand anything, you start at zero. It's better to do it the right way. It's kind of like IKEA furniture building. If you start with the last page, you'll never get there. If you do step by step, you're a lot more successful by the end.
Right. Agreed.
So that's how it came to be. And then the next firm I was working in, it was real estate investment only. So that's all they've done. Huge apartment complex, different states, well, hundreds of partners per each return. That is the place where I went from the bank job where I was earning $12 an hour, and I was like, oh, my husband was making $25 an hour at that time. I was like, I someday I'll make $25 an hour. When I got to that point and I got to a seminar, there was a guy talking about tax, sales tax, and he was talking about his job and his way of running stuff. And he was like, I'm making $250 an hour. I was like, what? We can do that? So to me, there was like kind of another point breaking of 10x. And then when I got in real estate investment company and I saw people who do nothing, I don't want to say nothing, but
You
it's
can say
people
nothing.
who don't have a job, don't have things to do. All they do is travel. They make, let's say, there's one good example. He gets about $8 million of cash every year. But getting cash and taxable income are different things, as you know, with
Hmm.
real estate investment. So when I see him make 8 million in cash, then how out of only 4 of those are taxable income. And then when we get to his tax return and his income tax return rate is less than mine from a W-2,
Yes.
that is the moment where I was like, I'm doing something wrong. This is not okay, because when you're a W-2 employee, what you do is you pay the most tax
Hmm.
and you get the least money.
Hmm.
When you are working for somebody else, you making money for them. That was the process
Hmm.
that led me to having my own firm, which also when I was opening, instead of opening thinking it's like I'm going to be a millionaire based on my accounting firm. No, the goal is 10 to 15 years to grow this to the point where I can sell it, then invest money in real estate and
Like
have
we do.
free life, have a
It is.
freedom.
I come to you from the other side. It's awesome.
Oh, I know.
So
I've seen the tax return of you people.
it's but we don't make any money.
According
I
to
haven't
IRS.
paid taxes. I haven't paid taxes in the last 2 or 3 years.
Yeah, well, you reported though, right?
I reported all of it.
Yes. Yeah. So
I
that's what
just
I'm
didn't
saying.
have to pay.
That's the huge difference between W-2 and
Yes.
not self-employed, but let's say real estate investment, is that self-employed or W-2, you get less
The highest
cash,
tax rate.
more tax. And
Hmm.
then real estate investment, you get high cash, next to no income. It's
Well,
fantastic.
it really is. It really is. I'm glad I got you on the call because, I try to explain this to people every day and it just doesn't make sense to them. First off, it sounds like a scam, doesn't it?
For those probably who doesn't understand the IRS codes, yes, but it's almost like investment on like stocks and bonds. Just because you got an interest that was reinvested or the dividends, you don't actually get the cash, but you got the income. So you earn that interest, you earn those dividends, right? Real estate is basically backwards. You get the cash, but you didn't earn it, so you don't pay the tax on it.
I now see this is perfect. So I try, like I say, I try and explain this to people. It's the I, what we are doing in our industry is exactly. Wait here, maybe this will explain it better. Someone told me the IRS tax code is 10,000 pages, and there's 300 pages on how to pay taxes. The rest of it is how not to pay taxes.
That seems right.
Right? It's more dense on how to save your tax money.
Yeah, and it's growing. The code is growing every year because they consistently changing things.
Yeah,
That's funny.
so we're excited. We're just blown away because we got 100% bonus depreciation this year. Or last year, actually, we just transferred years in 2025. I mean, we were just blown away. We're like, oh, cool. All our investments that year for real estate investors, if you invest $100,000 or $150,000 into something, you don't pay $150,000 in taxes that year. Isn't that
Or more. It
crazy?
really depends. But yeah, and in overall, it's really fantastic opportunity, especially when people do it on credit, that's how real estate most of the time is done. Usually, what they grab is a certain percentage of your actual investment money, and then they take a loan. And overall, you end up not even paying for as much as you're saving. And then
I,
there's
I
and then there's refinance that comes in time, and
there's
then suddenly
refinance,
another cash flow, and still no tax.
right? Right. So for the people who are listening, we refinance the property, and Kate can explain this a lot better than I can. But we refinanced the property. We bought it for, we'll say, $800,000. We refinanced it for it was appraised at 1.7, so we refinanced it for 1.2. The difference goes into our pocket tax free
Correct.
because debt is non-taxable.
Yes.
So and when I explain it to people, they're like, wait a minute, you got a mortgage and you pulled money out of the mortgage, you're not paying taxes. And I'm like, yes, that's against the law. No, that's
No, but
100% why we do it.
that is exactly why the top 3% of the wealthiest people in the whole world are real estate investors, because it is such a
Lucrative.
amazing vehicle for cash flow and yet no tax liability.
Plus, if you don't, your active income and you invest and you're considered a real estate investor, your active income is offset by your investments. If you were to
Mm,
as well, I mean, hear me out. So if I made $150,000 last year and I'm a real estate investor, and I invested $150,000 into a property, how much would I be liable for taxes that year? Especially,
well,
mind you, the 100% bonus depreciation last year.
that's where the trick is. You have to be able to claim real estate professional. If you're not a professional, say I'm a CPA and I also want to invest, my passive
Hmm.
income does not offset my active income because my industry. Now, if I end up getting a real estate license and I invest certain amount of hours, which is majority of my time,
Hmm.
yes, then I can get to claim that. So, per usual, the answer is what? Depends.
Yep. That's the correct answer every time. Check with your real estate, your tax professional, or Kate. She'll be able to help you out with that. Wrapping up the interview, thank you very much. What exciting plans you got for the next 6 to 12 months with your company?
Ooh, well, the next 4 months, it's a tech season, so I'm super
Oh
excited
yeah,
because after the tech season, I get to disappear. Nobody can find me for a week afterwards, no matter how they just try.
awesome.
And then personally, honestly, when I went and did full time my firm, is that I finally discovered that when you work for yourself, your boss is mean, but you get to have time off without issues. So
Right. You don't have to check with your boss to leave.
I have to, and she usually checks the calendar, but overall. I have a lot more freedom than if I work for somebody else.
Nice.
So with that said,
Awesome.
hopefully we'll expand onto more bookkeepers, a little more wider. I work from home and my bookkeepers work from home, but I don't know if I want an office as much as I like real estate investment from an accounting perspective when I can have people work all over United States. And I know how much I appreciate that for my family.
There you go.
I don't see a point to get an office as of right now.
You don't have to. I mean, there's a lot of virtual companies right now, and I actually, that seems to be the growing trend more than anything else.
Well, I do want to purchase a house up the street for about $1.5 million and have a media room there and an office space so I can kind of have both.
Well, you can take that off your taxes.
Yes, I can.
Yes, you can. Anybody can that works for themselves. Just so they know, you
Absolutely.
can take a portion of your house and take it off your taxes. But there's a neat little trick where if you do have it by the time you sell, then you have to give some of that money back, if I'm not mistaken.
There's recaptures, and then also, again, it depends. It would have to be more in-depth conversation what you have actually done. So if you were depreciating that property,
Hmm.
then depreciation is taken away from your basis. So say you bought it for
Hmm.
$1 million and then you depreciated that portion of your property for like
Hmm.
$100,000. Now your bases are 900,000, not a million. So when you sell a house, it's going to be whatever you sold it for minus 900,000, not a million.
Right. And if you sell the house and you're married, like Kate and me,
Not to each
you
other.
can touche. I like that one. You're not married to each other.
It's important.
Um, you can deduct if your personal house, you can deduct $500,000. So if you buy it for a million and you sell it for 1.5 million and you're married, you don't pay the taxes on that income.
Correct.
But you have
First
to live in a
500.
two, you have to live in a two for the last 5 years, correct?
Correct. You
Okay.
have to own it and live in it
Own it
because
and live in it.
yeah, so I have a couple of friends who do it very smart. Every few years they purchase a new property. So they live in it for 2 and then they rent it for 3 and they end up selling with no capital gains.
The last 3 houses I've done very well by doing that. It works out fantastic. Highly recommend it too. But
Yep.
we're not you. We're way older than you, and we don't. Our kids are 30. They don't live with us, so we can move every couple 2-3 years. We moved from Michigan to Florida, Florida to South Carolina, and all the properties we had in the last 10-15 years, we haven't paid any income on.
Yeah, that's smart planning. That's all there is. You have to do, as I said, you have to do the books. So you have to know the actual numbers. Based on that, you plan. Because if you don't know your basis or like how much you have set already, depreciated and stuff like that, you can't plan for anything. So once the foundation is done, then let's build a really nice house on top, right? Do
Hmm.
we want 2 stories? Can our foundation support it?
That's correct.
Do we
So
want
listen,
100 square feet or do we need to do it less?
1,000 square feet. So, getting to the point of if you guys want to talk to Kate, please let her know. She'll have an intelligent conversation and make a game plan for you. Kate, how would our listeners get in touch with you?
Well, the best way is always website, and there's always email and then phone. The website would be,
Could you give your email?
yes, Dnipro, Dnipro .biz@gmail.com. Actually, I have a bunch more emails, but I am so stuck with this one.
It's the first one. I do the same thing. I have multiple businesses, and they're like, "What email?" And it's just here's my personal.
Yes,
Just
it's kind of like you stick and you love it. Or you can give me a call, but an overall advice, don't try calling CPA in tax season, email or text. We'll find a way to respond to you a lot faster than if you're just trying to call. But
sounds
I also
good.
have a website, which is www.dniprobiz.com, DNIPROBIZ.com. And then there's some information there as well. There's always LinkedIn, social media, all kinds of stuff, but we're everywhere and we're happy to help.
Appreciate it, Kate. Thank you very much for your time. And for everybody else, like and subscribe to get more information. Please keep up with us. You guys have a wonderful day. And Kate, thank you very much for being on the podcast.
My pleasure. It was nice talking to you.
The pleasure's mine.
Thanks for listening to Driven, the Unscripted Success podcast. Want to share your story? Apply to be a guest at drivensuccesspodcast.com/guest.